Oh, what good, you guys? How you guys do? This is under Sokhela Forex World Changes. I hope you guys are having a wonderful day. So without wasting your time, in this video, we're gonna be explaining fake outs, né? We're gonna be explaining fake outs, how to actually understand fake outs, how do they occur, how do market makers and brokers take your stop loss. I think it's very important for everybody to understand how a stop loss been hidden, and if you have been suffering for being taken out by a lot of stop loss and losing money because you've placed the stop loss on a wrong position. So if you're still new to the video, make sure you like the video, and if you're still new to the channel, I'll appreciate if you subscribe. You can see that I drop content almost every day. I hardly spend a day without dropping any educational information. So let's get into it. Let's get into the video. So two things that are very important you need to understand is to understand support and resistance, né? So I'm just gonna draw two things, né? First, we have the price going up and then going down and then going up and then going down again. So we know that when the price just be in the same level up at this point, we know at this point, excuse me for the not drawing a very straight line because I'm drawing with this sketch. We know that when the price is at the exact same point up, we have what we call a resistance, right? We have what we call a resistance, and support is just the opposite. When the price is at the same going at the same point, the same level, what we call supports, né? So this is just pure basic of forex. You know that the price might go here, it's support, it's resistant, and then it goes down, it's supports, né? But we know that the price can create as many support as possible, and as many resistant as possible as well. So we know that it can create, but we know for the fact that the more the price hits this level becomes weak. So there's a high probability for this price being broken because it's been hidden for a multiple time, né? And then we know that at this point, we know that if the price has hit this level, there's a high chance of price being broken, né? So I'm not going to talk about when the price breaks support and then becomes resistant. I'm just going to focus on how stop loss have been taken out on the financial markets. If you are trading the forex, why the market makers always trigger your stop loss, and how do they know your stop loss is there? So it's a very, very simple theory. So since we know that the price 1, 2, so we know that this is resistance, né? So this is resistance. So when the price decides to go up again, we know that a lot of people, since they know that this point is resistant, they're gonna be looking for a sell, né? So they're gonna be looking for a sell. So we can agree that at this point, I didn't write it very neatly, but we can agree at this point there's a lot of stop loss, né? There's a lot of stop loss in this zone. Same thing applies on supports. When the price has been going here and then it's gonna go down again, we know that at this point there's gonna be a lot of stop loss because a lot of retail traders put their stop loss just below the entry point, né? So we know that when the price hit here, a lot of traders will go for a buy and put their stop loss just below here, and then the price will eventually or theoretically go up again. So this is the whole theory. So the market makers and the institutes knows that they know guys that the stop loss are always just above the resistance level or the support zone. So they're always gonna gun for the stop loss at this point. They know that they are not dumb. They know that there are stop loss here and then there are stop loss here, both on resistance and support. So you have to understand support and resistance is one of the most popular information. If you started for probably that's one of the most information you pop up onto, because that's the most information that we are given as resale traders, that your stop loss have to be below resistance, the stop loss have to be, so that is one of the most manipulated information, which does not work. Honestly, I think support and resistance works, but it's not accurate. Most of the time you're gonna find yourself being triggered and being stopped out. But if you are trading without a stop loss, you will win a lot of trades. But at the end of the day, if you're trading without a stop loss, you're gonna find yourself blowing an account, because there's gonna be this one trade that just wipe up your whole account. Nah? That just happened. That's how the whole game is that it is. So I want to teach you how to actually avoid being triggered out with your stop loss, and avoid losing your money unnecessary when you are trading this kind of style. Né? So let me just show you something before we get any further. So for those who've been in the community, we know that we are trading price action manipulation, Quasimodo. Né? So understanding Quasimodo is going to help you a lot. So let me just draw a simple Quasimodo. First we have a shoulder, right? Then you have a head. So this is a simple Quasimodo that has a low here. This is the low, and then this is the lower low. So the lower low, we all know that shows that the structure has been broken. So what is going to happen is the price is going to create some sort of a fake out, which they're going to create some sort of a resistance, trapping the people that are be going for a sell or a buy. So they're going to create the same thing that I told you here. They're going to create a high, and then they're going to create another spot. So you can see here at this point we have 2 points that are very, how do you put it, very they are very in a horizontal, significant horizontal zone. So these are significant horizontal zones. So we have your R1 here, and then we have your R1s here, R2 basically, R2 here. So we know that the price has been going 1, 2. So they are basically creating what you call a trap for the people that trade supports and resistance. So when the price comes back again, when the price decides to come back again, please bear in mind, guys, that I'm gonna be showing you this on real time. So I'm just trying to scratch it out and write it down and try to actually make it visual for you guys as possible. So when the price comes at this resistance zone, again, they're gonna make sure that they take out the stop loss, because there's a lot of stop loss here if the price come here at this point. So when the price decides to come at this point, what they're gonna do, they're gonna trigger all the stop loss. They're gonna pass this resistance zone. They're gonna pass this resistance zone. They're gonna pass this resistance zone, and then decide to drop at the Quasimodo level. So at this Quasimodo level, this is where they're gonna decide to do, and then decided to drop down again. So drop, let me just write the drop down again. So this is how you see a typical easy fake out. So I'm gonna show you guys on real time and on real market right now. So let's go to the German 30, this German 30, we have this fake out. Okay, so first thing we've spoken about, we're just gonna go back and explain the exact same thing that I was talking about here, and then go back to the charts again. So first thing we look for is Quasimodo, né? So here's the Quasimodo at this point. Or let me just make it clear here. So here's the Quasimodo at this point. First you look for a shoulder, then you look for a head. So here's the Quasimodo. Let me draw the shoulder. This is the shoulder. First the shoulder, and then obviously the shoulder have to be below the head. So, and this is the head. So that's the first point we are looking for. So let's go and see. So here, shoulder, and then there is the head. Second point is the low have not to be equal, showing that the structure has been broken. This lows. Okay, let's go back to the charts. So you can see this low is not same as this low, so the structure has been broken because it was creating lower lows at this point. So let me delete here so you can see proper and non-shy to be a bit of amateur and stuff. Okay, so you see that this low is this low now, so we have this low, so we have lower lows being created now. So already we have taken another box. So so what are we looking for right now? We are looking for resistance 1 and resistance 2. Resistance 1 and resistance 2. So resistance 1 and resistance 2 is this point. You can see here, if I just draw a horizontal line showing you that this is a clean resistance. Let me just draw a horizontal line here. So you see this is on the exact same point at this one. So this is a significant resistance at this point here. Let me just draw R1, okay, R1, and then here R1, and then we have here R2. R2. So already we have what we're looking for. I think this is our third box being ticked. We already see our R1, R2. So this has been taken. So let's go back to the theory. Knowing that this is R1, R2, we know that at this point, by just highlighting for you, making it more simpler, we know at this point, this zone, there's a lot of stop loss. So the price just have to go above this R1, R2. They have to trigger this R1, R2 and then go down after taking the stop loss. So what the price did, it went just went down a bit, and then this was not a coincidence, guys. This was not a coincidence. After going up this zone, you see how coincident it is. It just took out all the stop loss at this point. After taking the stop loss, what they did, they decided to go down. So you can see, if I draw just here, you see it at the exact same Quasimodo level. Say that same Quasimodo level, just exactly how I explained it, at the exact same point on the Quasimodo level, and then it decided to drop. So this is a very easy methodology of the fake out. This is very easy. You just need to practice it. So you can see it decided to, after taking the stop loss, decided to drop. It's not a coincidence. Then it decided to drop. Very easy. So we have let me show you something. There's a Quasimodo that I saw. I think it's the AUDNZD. This one, yeah, I think it was on the weekly. You see this one hasn't occurred, but this is gonna be a setup on the future for people who do swing trading. This exact Quasimodo, you see the exact same point. If you just draw a horizontal line here, you'll see, okay, there's a nice horizontal line here. So there's a lot of orders here, and then you have to see a Quasimodo, and then the price will decide to drop. But we are not there. I'm just trying to explain the first Quasimodo of this will be the sell one. The sell fake outs. The sell fake out. Sell fake out. Sorry about that. So let's go for the buy one. The buy is just vice versa. If you just draw what I've just told you upside down, but it's the same theory, nothing changed. If you understand, you have to understand the buy Quasimodo, and then you have to just understand the supports. Okay, let me just draw it out for you. So first, the Quasimodo of buy, it has a shoulder obviously, and then it has a head. So it has a head. So it's the same thing. It's just the same thing. A lot of people say they I can't see Quasimodo, but I don't know why. Because this is just the same thing. I don't know why it's not drawing right now. So it has the shoulder. It has the shoulder here, and then it has the head. Please relax. I'm gonna show it you on real time. Ne? I'm gonna show you on real time. So we have a shoulder, and then we have a head. Ne? So second thing is the lows don't have to be the highs, cause it's a buy Quasimodo. So this high have to be not higher than this one. So basically what I'm trying to say is this high is higher than this one, showing you that the structure has been broken, so they are moving up. So same thing applies. They have to create what you call supports, ne? So one, and then we go down, and then we go down. So same thing. Right now we're not writing R, we're writing S, cause it supports, ne? So this is support. So what happened is the price has created support zone at this point. Let me just I want to delete this. So the price have created a support point at this point going down. So the price has created a support here. You see it's a support. So there's a lot of stop loss here. So they have to take the stop loss before they go up. Ne? There's a lot of stop loss at that point where I just highlighted for you. So there's a lot of stop loss at that point. So what the price is going to do is going to take the stop loss and just send on the Quasimodo, and then decide to go up again. So this was the Quasimodo level of the buy. So you have to understand the Quasimodo before you know fake out. So let me just write QM for you to know, okay, this was the Quasimodo. So you see, this is just the exact same thing what I've just spoken about on the sell Quasimodo. It's just the buy. You just need practice. So let's see it on the real time. Let's see it on the real time. Okay, I think we will find it on the USD. Okay, there it is. So the buy Quasimodo. Let's just go and try explaining exactly what I've just spoken about. So first thing we're looking for is a shoulder. Same thing like we looked for before. Shoulder. First thing we just look for basically is the Quasimodo. So first thing, shoulder. There is the shoulder, and then there's the head. Let me just draw it for you so you can see. So first thing, shoulder, shoulder, second head, so second head. Okay, let's go there and look for the shoulder and the head. So there is the shoulder, and then there is the head. Third point is the higher highs. These higher highs, these higher highs. So let's see for the higher highs. So you see this high is going this high. So it's showing that the market has broken a structure of buy, né? Of the buy. So higher highs being created. That's the second point. So the last point, the most important one, is when the price is creating a support 1 and support 2, creating some sort of a support zone where they're going to trap a lot of stop loss and then go to the right position. So let me see that one, that important point. So let me delete here so you cannot put your focus here. Let me delete here. Okay, delete all. Okay, so this is what I was talking about here. But these ones are very, I don't know if I should zoom in. Let me try and zoom in. Okay, there you have it. So if I draw a horizontal line at this point, you see that there's a lot of spike here. Okay, so you see this. Let me just go zoom in a bit. There it is, Nazo. So this is S1, S2, né? So let me just write here. So knowing at this zone on the USD there's a lot of stop loss here because of this support has been created. So there's a lot of stop loss here. This is S1, S2, S1, S2. I know that a lot of people that gonna go for a buy, they're gonna put your stop loss just below here. It makes sense, right? So what the price does is go and took the stop loss. It takes the stop loss and go up. So let's see where did it turn. So you see, where did it turn? It turned just exactly on the QML level. So let me zoom it in for you. So you see, let me just let me delete this one. Okay, let me zoom it in for you. So you see, the price took the stop loss, just went below, take the stop loss, and you see how close the QML level is. It's not a coincidence. You see, just here at this zone. So let me just drag this red line so you can see this. You see exactly at the same close of the QML level, and then decide to go up. So if you see this, you see S1, S2, and then 10 on the QM level. This is the Quasimodo level. It turned exactly at this point and then decided to go up again. So this is very effective. So if you like this video, make sure you click the like button and you subscribe. I'll appreciate if you subscribe, and bye for now.